This episode, we're talking about Melbourne again, starting with the state of Victoria, drilling down to the LGA, and then drilling straight into the suburbs of Broadmeadows and Dallas that you guys have sent in.
Victoria's population growth now is 2.7% a year, second highest among all states.
Unpacking this is none other than InvestorKit's lead research analyst, Junge Ma.
Melbourne now is different. A lot of new houses are being built. Something I'm happy to see is its net internal migration now is positive. Population growth naturally is high. Year on year, Melbourne itself is 3.5%.
Is it a buy or what needs to change for it to be a go?
Broadmeadows and Dallas, I would say
If you've been thinking investing in Melbourne's northern suburbs and want to understand the areas on a more detailed level, you're going to enjoy this episode. My name's Todd Sloan. This is the Pizza Property Podcast, and you're listening to my chat with Junge Ma. Junge Ma, how you going?
not bad.
Good.
So happy to be back.
It's always a pleasure. As I think I say that every time. It's always a pleasure. I need a new way of introducing you, but it is always a pleasure to have you. We're talking about Victoria today. Mm-hmm. More specifically, we're going to be diving into Broadmeadows as a suburb, which I know a lot of people have got their eyes on. But before we get into this, I wanted to actually read out the question. This one's been sent in by Callum. Now, Callum's actually gone into a bit of detail here. Callum's asked 3-bedroom houses available for 500,000-600,000 on over 500 square metres of land, just 15 kilometres north of Melbourne CBD. Have found houses with rental yields around 5%, vacancy rates 0.8%. Is it a buy or what needs to change for it to be a go? First of all, Callum, thank you for actually providing so much detail, mate. It's like this actually gives us a lot more scope to jump into. And I got to say, I think you're asking a question a lot of people have got in their mind as well. So, Jung, before we start getting into the state level going Victoria, then the LGA, then the suburb, is there anything you wanted to chat about, or should we jump straight into the state?
Let's just do it.
Done. Let's talk Victoria.
Cool. Victoria, population growth is really good.
Yeah?
It is second highest among all states. Top one, of course, WA.
Yep.
But Victoria's population growth now is 2.7% a year.
2.7, okay.
Very high. And something I'm happy to see is its internal migration. Net internal migration now is positive.
Net internal migration, for anyone that doesn't understand, can you open that stat up a little bit?
Right. Net internal migration is basically the difference between people moving out of Victoria and people moving from other states into Victoria.
Gotcha. So if 1,000 people leave and 1,000 people come, it's got a net migration of 0%.
Yes, correct.
Yep. Okay.
And before 2024, the only states that were seeing positive net internal migration was Queensland and WA. They're attracting a lot of people from other states, and Victoria was losing.
Right. Okay. And is that's now changing?
Now, yes, it has become positive.
And how positive are we talking?
I have a few hundreds.
By a few hundred?
Not much yet, but it's good to see the shift.
Okay, so it's not that it's positive by heaps, but it's the fact that it's at least going back to positive.
Yes.
Gotcha. What do you reckon it is? Do you think it was a lot of that to do with COVID or?
Not really COVID. I guess it's one because of the relative affordability now. Melbourne compared to Brisbane, Adelaide.
Yep.
And then the other thing is there's a lot of construction going on in Victoria.
Okay.
And that needs a lot of labor. That could be one of the reasons.
Out of interest, do you see any big similarities with Perth 2021 and Victoria now, kind of end of 24, start of 25? Because I just feel like I remember Perth was getting a lot of nah, it's never going to happen, and then just kabam, it just blew up. Mm-hmm. Are you seeing any similarities there, or are you still looking at those no, they're two totally different situations?
There are similarities. One is the recovery of the economy. Mm-hmm. Right, the economy itself, it's strengthening back in 2021 in Perth and now in Victoria or Melbourne. What else? Population growth or migration. It's growing a lot compared to a few years ago.
Okay.
But one thing different Oh, and also the affordability. Perth was affordable compared to other states, and now Melbourne is affordable compared to the other capital cities.
Okay.
I guess the only difference is with the housing supply. Perth, I believe in 2021, the housing supply wasn't high at all. After, I guess, 6, 7, 8 years of
like stagnation.
Yeah.
Yep.
There wasn't too much construction happening there. But Melbourne now, it's different. A lot of the new houses are being built.
And is it a lot of houses or is it a lot of units? Because I saw something the other day that was saying like there's more high rises now in Melbourne than I think in New York, which can't be right.
Really?
But I think they might have been talking about like residential high rises. Like it's insane how many apartment buildings there are.
Right, and they are actually encouraging unit.
Yeah, more of them now
construction.
because they've just cut like stamp duty and there's a whole bunch of incentives around that.
Yes.
But is that coming into that construction stat, or are you specifically talking about houses?
Both.
Both.
Yeah,
Okay.
both. There lots of houses are being built in the west, north.
Yep.
Yeah, and then in the inner city area, units.
Got it. Okay. So some similarities, but it's not like an identical market. Gotcha. Okay. All right. Is there anything else you wanted to talk about Victoria-wise before we start moving on to the LGA?
That's pretty much it.
Okay. All right. Now, why don't we jump into the LGA of Hume?
Yeah, right. LGA Hume. But I guess I have to make a note here. When we look at property market data, we mainly look at SA3 level data. And for SA3, we are looking at Tullamarine, Broadmeadows.
Gotcha. Okay.
So basically the LGA of Hume and the SA3 of Tullamarine, Broadmeadows, they overlap with each other. In Hume, there are actually two SA3s. One is this Tullamarine, Broadmeadows. It's so long. And the other is called Sunbury, and it's in the north.
Gotcha. Okay. So as far as the Tullamarine's concerned, how much of Tullamarine is like, because isn't that a lot more like the airport industrial, or there's still like a reasonable resi component to that, or is it like almost non-existent?
There's still a reasonable amount of houses there.
Okay. All right. So it's something that you'd still look at then. It wouldn't be a something that you wouldn't compare because of the amount of commercial.
Right. Because when we talk about LGA, SA3, they're actually huge.
Gotcha.
Many suburbs.
Okay. All right. What are we seeing then on that level?
Not bad. An area under construction, so population growth naturally is high, 4.15% year on year. Melbourne itself is 3.5%, so this is even higher than Melbourne.
Right, so lots of people are moving out that way.
Right.
All right, Jung, so 4.15% as far as population growth. So around here, we're actually talking about higher population growth in Melbourne itself. Talk to me about the rest of the stats. What are we looking at as far as like capital growth, all the rest of it?
The area, the SA3's last 10-year house value growth wasn't bad at all, 80.6%.
80.6%, okay.
It is actually higher than Melbourne's average. Melbourne is now 60%.
Over the last 10 years?
Yeah.
You got any contrast available just at hand? Can we just compare that to like Brisbane or Perth?
Brisbane now, it should be 90-something.
Okay.
Adelaide as well.
Yep.
Perth is still down at around 30 to 40%.
Wow. Okay.
Still some room for catch up.
Gotcha.
But Melbourne, compared to the other capital cities, it's actually a low one.
That honestly surprises me because there's so much of the stuff I've been looking at with Melbourne, it's lower. It's like their 10-year growth is actually pretty average, or is it more so, am I confusing that with maybe like their 2 and 3 year growth? Is that what's really sort of plateaued?
Yes, I guess it's the the slow growth impression. I think it's more from the last 2-3 years.
Right, not the last decade. Because I guess Melbourne had a pretty amazing boom from what, like 2013 to 2017, something around there?
Yes, 2017, 18. Yes, sometime there. That one wasn't bad at all.
Gotcha. So a lot of that growth would still be encapsulated within this stat.
Yes.
Got it. Okay.
And regarding this 80% growth in Tullamarine, I would say one reason that caused this 20% difference could be because of the gentrification or the development of this area.
Okay.
I guess 10 years ago, there were not so many new houses in this area, so median price could be much lower than the Melbourne average.
Understand.
Now, as more and more new houses are being built, the median house price, I think, is skewed by these better houses.
Gotcha.
So the growth is not just the value growth, but more the component change.
I understand what you mean. So is it kind of like when you compare houses on the Esplanade to houses like 2 streets back? The Esplanade will always go for more, but typically if you're comparing 2 streets back and it's a 3-bed, 1-bath, most of the time if you're buying a house on the Esplanade or you're building a house on the Esplanade, you're not building a 130 square metre 3-bed, 1-bath. You're building a 4-bed, 3-bath, 300 square metre. Like, so not only are you not comparing apples and apples as far as like the location, but then there's a huge dwelling difference that can have a value significance, a value shift. Yeah, let's say.
Yeah, I think that is it.
Got it. Okay. All right. Now, what else do people need to know about the LGA before we move on to the suburb of Broadmeadows?
About the LGA, I have to mention this. The unemployment rate there could be a concern to many people. Now it is 7.2%. It's higher than Melbourne's average level.
7.2%. What's the average at the moment?
Melbourne's average should be
like
somewhere
4?
Yeah.
Wow, that's a lot higher.
Yeah, I saw online people were saying there are a lot of unemployment immigrants in that area.
Yeah.
That made this high unemployment rate.
Right. Okay. So something to maybe be mindful of.
Although I guess through our previous data analysis and everything, unemployment rate is not a determinant of price growth. You still get good capital growth even with high unemployment rate. So it's not that high unemployment growth is definitely a bad thing. It's just one influencing factor.
When does it become a concern? Because if it's not a concern at almost double the state average, does it become a concern at triple? Like, or is it just like, no, it's just something to sort of be mindful of, but don't let it influence your buying decision too much?
When it's extremely high and it's affecting the safety of the suburbs, or it's high because there are a lot of social housing in this area, then that would be a concern.
So when it turns into like an actual ghetto, like in the general sense of the word? Yeah, okay. All right. All right, and I don't think Broadmeadows is going there just yet, so I think we're good. All right, so moving on from the LGA of Hume and talking about the difference with our SA3s that we've just covered now, we're now jumping into the area. And I've actually just realised that Callum's actually asked Broadmeadows/Dallas. So we're kind of having a little bit of the best of both worlds. But these are areas, if you're not familiar with Victoria, like quite literally right next to each other. So where do you want to start, Jung?
Let's start from the easiest, the price trend.
Yep.
If we go to suburb profile pages of these, REA suburb profile pages for these two suburbs, you see that the price trend line is actually trending upwards. So that's a good sign. These two suburbs are recovering now. And what's resulted in this recovery, I think, includes several factors. One is their inventory level, the relationship between supply and demand. So in Broadmeadows, now it is 2.1 months of stock. It's 13% lower than the same time last year.
Interesting.
It's already 2.1. I think it's low, and it's lowering. And Dallas, not as low, 2.6 months of stock, not bad.
Okay.
And it's kind of stable over the past 1 year.
And just a little heads up for anyone that is looking at potentially buying in Broadmeadows, be aware of some of the overlays out there in respect to one of the runways that was going to be built, because it can affect subdivision potential. Just a little bit of a side note for you guys. But what else are we talking about as far as Dallas and Broadmeadows is concerned, Jung? Because it's sounding like Dallas has got higher inventory levels, not quite as much pressure. Broadmeadows, you got a bit more pressure in that market, and it looks like it's trending in the right way. Whereas if we were to have this conversation 6 months ago, I feel like you would have been saying like, nah, there's not really as much pressure. Things are pretty stable. Has it changed that recently, or am I just sort of putting my opinion over something that's not correct?
If it's half a year ago, I may have the same answer. I think.
Okay. Yeah.
We were seeing signs of recovery at that time.
Yep.
It's just that after 6 months, we have seen prices actually going up now.
Gotcha. Okay. So one of the big things now is holding costs. Best way to make sure your holding costs are healthy is a good yield. It's trickier and trickier to find. Melbourne historically has not been known for good yields, but what are we looking at for Broadmeadows and Dallas?
Broadmeadows and Dallas, their yield are just, I would say, moderate.
Okay.
Broadmeadows yield is now 4.2%.
4.2.
The medium level.
Yep.
And the Dallas one is slightly better, 4.5%.
4.5%.
Yeah. But the good thing is they are increasing, because rental growth is now not bad in these areas. But at the same time, sales price is not growing as strong. For example, Broadmeadows rental growth last 12 months was 12.5%.
That's pretty good.
Yes, compared with that, sales price was 6.4%. So rental is exceeding sales prices.
Yeah, okay. Do you feel some of that is because of this whole like mass exodus, as the media puts it, of a lot of investors, and it's like there's just simply not as much rental stock?
Yeah, I guess exodus of investors that should have contributed to it. And on the other hand is, I think it's the strong population growth, especially interstate migrants and overseas migrants, pushing housing demand, especially rental demand, up.
Gotcha. Okay. All right. And as far as the actual prices themselves, I mean, this is what Callum's talking about. Buying a house 15 k's away from the Melbourne CBD, $500,000 to $600,000. It almost sounds a bit of a joke. Like that's a pretty good price.
Yeah, but it's happening in Melbourne, because in Broadmeadows, median house price now is $585,000.
Yep.
Just within that range. And Dallas as well, a bit cheaper than Broadmeadows, $540,000.
$540,000. Okay, and these are the median prices. So there's potential that you could still get something a bit below that, maybe if it needed a bit more work.
Yeah.
Bit above that, maybe if it was all done.
Right.
Gotcha. So I've got to ask, is it a no or is it a go? And if it is a no, what needs to change for Callum to maybe look at this area with a bit more confidence?
If we only look at the property market trends, it seems like a go, because market pressure is tightening and prices are starting to recover, to go up again. But the thing is, if you want fast growth or really good growth in the short term, it might be a no, because recovery needs time. For Melbourne, this recovery might be, fast growth could be happening in 1 to 3 years.
Yep. Okay.
Although it's on its way to recovery. So if you are after fast growth, it might become a no. And then the other thing is, in Broadmeadows, we are seeing relatively high renter percentage or rental property percentage.
Gotcha. Okay.
It's 49% for now.
Wow.
And I guess lots of investors are being attracted to this area, so that ratio could become even higher.
So you're saying there could end up being a bit more of an oversupply of rental stock?
That could happen.
Okay, so that's not a definite that you're like, this is going down that path, but it's like it's leaning towards a possibility.
Yes.
Yep.
And if that happens, rental growth could slow down. And because of all the competitors you have, vacancy rates could go up, then your vacancy period could become longer.
Yep.
And that just could affect your cash flow.
Gotcha. All right. So it sounds like it's a bit of a no. It's a bit of a go and a bit of a no, but it's really more of a go than a no, but it's a go with a whole bunch of a caveat around it. If you're expecting some boom time in the short term, Callum, it's probably a no. But if you're ready to buy and kind of sit around not sit around, but, plant the seed is a much more positive way of describing that for the next kind of 2, 3, 4 years, then it's sounding like it's a go. Is that right?
Yes, right.
Yeah.
That's basically it.
Okay. Junge, is there anything else you wanted to talk about? Broadmeadows, Dallas, Victoria in general before we part ways today?
I guess that's pretty much it.
Well, as always, Junge Ma from InvestorKit, thank you so much for coming on the show.
Thank you, Todd.